What's up, YouTube? It's Joe Catchpolia sitting on the couch looking at a new place to invest in fractional real estate online. Tonight I'm going to check out a property on Casa shares. Um, it is so it's very much what I'm kind of calling the arrived homes clones. It's very, they're doing that same strategy where they're buying a property, putting that property in its own entity, actually creating securities out of those, the entity interests, selling them through a broker dealer. They are using a different broker dealer. From looking at their information, it seems like each entity is set up as a REIT, even though it will hold just a single property. Um, and I've been pretty dismissive of these overall. I think that that's been my general stance is like, oh, it just doesn't make sense. The fees are too much and you're not going to make money. I'm going to actually dig into one of the properties that they have a little bit more because I think that that's not. I think we've seen so many of these now, and I think that there has to be. It's clear that there's a demand for this style, right? Where it is a asset that's just actually a security, not trying to work into any safe harbor or loophole. There's clearly demand for that product, and so I want to actually look at the individual properties because I think if they get I think if you had an average property like what Mogul is putting out, I think they could do it in this style if they wanted to. And I think you'd make a little bit less money because of the expenses associated with the securitization. But I don't think it would be. I don't think it would be wildly different. Um, I'm not really sure, but so I wanted to dig into this a little bit and just show you. So, they've got a pretty nice website as far as like just general use of it. They just okay, select a property, claim shares, sit back. They're just pitching the um, it's real estate, it's passive, passive income. If you click on their invest tab, they have several properties, but there's only one that's actually available to invest at the moment. From looking around, it looks like this might have been available since October of last year, maybe longer, but it looks like since October. Um, Although their initial circular is all the way back, I think, until offering circular, I think, is into 2023. So I'm not sure, but so okay, where are we at here? This is Rexburg, Idaho, and this is one of the things I actually didn't. Yeah, I think that and see, this is what's happening. Oh well, this one's in Las Vegas. Okay, so we got a couple different markets that they're looking at. Utah. So some of the other ones look like they were just going to try to do just one market at first, which I actually think until, if they had some competitive advantage in that market would make sense. But it looks like these people are looking in a number of different places. Um, so I was like, okay, well let's try to figure out what's up with Rexburg. Did the same thing I always do. It does have fantastic population growth. I mean, this is one of the strongest population growths we've seen, but it's a big part of it is because it's coming from just a very small base, right? I mean, this is much smaller of a market than I'd ever want to invest in. Being a market snob, I'm typically looking for 100,000 population or more. Um, but there's plenty of people that make money in smaller markets. As a reminder, I'm not trying to tell you what to do, right? You want to do your own due diligence on the property and also on the specifics of the investment because I'm going to talk about the property a lot, but that's you're actually buying a security if you buy on here, right? And so I'm not telling you whether you should or shouldn't buy that. You want to do your own due diligence on that, just like always, right? And so let's see. But this is much smaller market than I'd normally be interested in. So I looked at the county data because that's the next size up, and it turns out that Rexburg is the largest city in the county, and the county again has been growing very fast, but it's just such a small population. So it's tough to know. If I were going to invest in this, I'd want to dig into what's going on here quite a bit. Where that population growth is coming from. Is this just people moving out of California and Washington, which I think is what's happening in a lot of Idaho. Um, I'm not sure though, right? It's something you'd want to dig into, but for me, this market would I mean, if everything else looked amazing, maybe I'd be okay with it, but it's not really what I'm typically looking for. And so, okay, thinking about the property itself, purchase price is 225. Um, on Zillow they're saying 228 is the current estimate. Not too far off on. I think Realtor actually has a higher than the purchase price, so that's good, right? Like Realtor thinks maybe they got a deal, or maybe Realtor thinks last year it was the right price and it's gone up. They have a higher rent estimate too, so that's nice, right? This is uh, the company saying we're going to get a monthly rent of 1250. Um, I think that's sort of the extent of the good news, though, right? So, well, and a couple of things. So, I had been digging into the property taxes a little bit, but we'll get back to that. So, I want to go into one, if, obviously, if you're going to invest in this property or in this security, you'd want to read this whole offering circular. It does give you a ton of info, but there's a few things I wanted to highlight. The first thing is this is their acquisition investments. These are their primary characteristics, and they're saying cap rates greater than 4%. And if you've been watching my channel for a while, I think this is an insanely low number. I don't understand how anybody buys at a four cap and expects to make money. If you think about the properties that you've seen me review on Mogul, on the low end, we're double that, right? We're talking about eight plus, right? And in some instances, even significantly better. Um, so I think this is going to be. It appears to me to be their real problem. And actually, one thing that's interesting is they explain how they calculate their cap rate, right? It's their rental income minus property management fees, real estate taxes, property insurance, maintenance expense, marketing incentives divided by purchase price. I'm going to do some math around this on this particular property, but it seems like they might not even really be including everything in there, or some of my number assumptions are a little bit off. Um, the minimum size. They're looking at properties that are less than 30 years old. Seems like this is the pretty common among most of these arrived clones, right? They seem to be buying pretty new properties. Um, which sometimes that makes sense, right? You might have lower capex, but a lot of times it is, when you're buying new homes in cookie cutter neighborhoods, it's tough to make them work at the level of cap rate that I'd expect to be able to actually make money with an investment property. They give you pretty broad price range. They also talk about, when they're looking at markets, they want to have, positive rates of job growth and income growth. I think that's great. Large university and skilled workforce. I think that's a pretty good one to have too. As long as you're not just a college town, right? I'm very scared of just investing in college towns alone. Um, Especially if I'm investing for the long run, right? Because I think there are certain like large state institutions and whatnot that are never going to go away, or at least will take a long time to go away because of the general experience. But I think a lot of colleges have seen some pullback in actual in-person enrollment, and I think there's a good chance that that continues. Um, what this one is actually sufficient inventory for us to be able to scale to 100 to 500 homes. um, that's a pretty interesting one, especially when they're in such a small market, right? I mean, they're looking to be okay. If they are saying that Rexburg is that, well, they're if you have 50,000 people, let's say that's 25,000 households. They want to buy 500 homes. Yeah, I mean, I don't know. What is that? That seems like that's 500 divided by 25. Yeah, I mean, they where they could own 2% of that market. I don't know. I mean, that seems like a kind of a weird one to me, but I hadn't, and popular with millennials. I think that's an interesting one. I think that could, um, it's not a specific thought that I've had, so it's something I'd have to think a lot about to really dig into. Like, well, I guess that is a sign that we should have some continued growth for a while, right? You don't want most of the growth to have come from boomers, for example. I'm having a hard time talking today. If you haven't noticed, all week I've had really long days. I've got family in town, and I'm not used to doing so much stuff. So, it's been sorry if these videos are extra garbled or whatnot. Oh, I haven't heard any feedback about if the mic is working better in this position with this setting. If it's fixed the volume problem that a couple people mentioned, please let me know. I guess while I'm taking this break, please like and subscribe. In the description to this video, there's a link to our Discord. There's another member in our Discord has, put a pretty nice blurb about Casa shares, with a bunch of links to other videos about them. So I appreciate that. I think it's super helpful. That's the kind of stuff I'm hoping to get. More of this real back and forth about some of these deals, some of the platforms. And also in the description to this video, I have links to all the sites I'm currently invested on. As always, do your own due diligence on those sites. Don't just invest in them because I did. Same thing, do your own due diligence on the properties themselves. Anyway, I thought this was pretty interesting, the stuff that they had. Overall, I think it makes a lot of sense, except for the four cap. I mean, it strikes me that this is the number a lot of these institutional or a lot of these like arrived home clones are going for, and I don't understand. I don't know if they don't realize you can do a lot better than this, or if they don't believe you can do better than this at scale. And that's one of the things. Like, Mogul is putting out quite a few properties, but if you really think about it, could they find hundreds of properties like the ones that they find on a regular basis? Like, maybe it limits their scale having the level of deal that they're finding. That's one of the things that I think, um, that I wonder about. And, okay, that's enough about what they're specific, what they're looking at. I want to get into the fees a little bit because this is what I've blamed a lot on why this business model doesn't work. Um, so you have the acquisition of the property, 225. They charge a 6% sourcing fee, which is 13,500. I think a lot of them choose this 6% number because people sort of think, oh, that's just a realtor fee, right? And this shows up as 499 because this is a percent of the total investment, right? It's not, but as a percent of 225, this is going to be 6%. I'm pretty sure. Let's actually just do that math and be sure because math is fun. So 225 divided by 13,500. Oh, hit the 1 over x. Yeah, that's 6%. So okay, they're charging a 6% fee. In addition to that, they have these offering expenses that they're charging up to, and it allows them to charge up to 2% of the total offering amount, right? And so that's another $5,000. Okay, so now we have, but as we've just seen, 2% of the offering amount, but what percent of that, what is that um, of the purchase price divided by 225? Yeah, another two, almost 2.5%. So you're talking about 8.5% in fees and expenses related to doing the offering as well. Um, if that were the extent of their fees, you might be. I think you could still make that work. I mean, it's a lot of money, but Mogul is charging a 5% acquisition fee. And so, and I'm still very happy with their deals, right? Again, just because I like them doesn't mean that you should invest there. You want to check them out yourself, make sure, because I could always be missing stuff, right? Um, but they're charging a 5% fee, and I find plenty of deals on their site that I'm happy with. And so, okay, and they have some other expenses too. They don't have this large of an offering expense, but this has to do with the public offering of the securities, right? Um, but then, they're also paying a brokerage fee, which I think is interesting because, on the buy side, a lot of times we're not paying that, right? We're getting that paid from the seller side of the deal. So I thought that's interesting. Okay, so we have another 1% there. Um, I'm sort of curious, and I didn't dig into it enough. Is this really like a related party that's making some additional money doing this? And I'm glad they have capital reserves. It's not a ton of not a very large amount. And then they mentioned that they're going to do about $7,000 of um, some kind of work on the property. So I think that's perfectly fine, right? But so it's really the almost 8.5% that makes this deal, plus the 1% brokerage fee, which again is higher than that, right? Because it's this is 1% of the 270. Oh, that maybe it is. Maybe that's a percent of the, but to sell these, right? So maybe that's what that brokerage fee is. It's not the real estate brokerage. It's actually um, the sales of the shares. I bet you that's what it is. Okay. If you know the answer to that and you've dug into it more, definitely please put that in the comments because I think that's probably what's going on there. But again, I mean, it's so you just have a lot of layers of additional fees. Um, but I think, if you had a sufficiently good property, I think you could overcome that. Uh, oh yeah, let me go back to that one in a minute. But so let's dig into this property a little bit more, right? Because I did some math around. Okay, uh, 225,000. They're saying they're going to rent it for 1250. Now, maybe it's actually 1350 when you look on a couple other places, but I'm going to take their word for it at the moment. If you change the math and did 1350, it doesn't change it that much. Um, let's see. Okay, yeah, we already looked at the values. Why do I have? I'm just making sure, trying to close some of these if I can. When I get too many tabs, my computer just doesn't seem to like it. It's just only when I have this recording software running, so I don't know. Let's see. So this is my math on this, right? So I said, okay, I took their word for it on the rent. I'm applying a 5% vacancy collection loss because I think you should always charge, include some vacancy and collection loss. I mean, I don't think that. Oh no, I'm sorry. I'm applying a 6% on here. I don't think that it ever makes sense to assume that you're going to have 100% occupancy for your entire holding period. And 6% is, in a market that's has pretty strong rents, pretty strong rental market where there's a lot of demand for units. That's it's basically saying it's going to take you 3 weeks from the time a tenant moves out till you have a new tenant in there, right? It's not very large amount. Or if you had a situation with a non-paying tenant, I mean, but before you get them out and everything, I mean, it's to be able to do that quickly, like it's really not accounting for a lot. But if you average that across your whole portfolio, Um, and actually, when I look at certain markets, there are ways, if you can't find that data, to sort of use the rental days on market to sort of back into it. And so that's what I do a lot of times. They charge an 8% management fee. And it's interesting what they're doing. So they're saying, okay, it's 8% management fee. If we can find a third party manager to manage it for less, we're going to hire them for less, but we're still going to charge 8% and we're going to keep the rest. This is Casa, Casa shares keeping the rest. So we're always going to have that, even though if they did get to a pretty large scale, I'd expect them to be able to have a significantly lower than 8% management fee. I know, you can get down to 6 or 7 pretty easily, without a ton of scale. And so so they're making some additional money here. I looked up what the HOA fee is on this because it's a condo, right? I mean, this is not a single family home. Oh, it's here. It's a condo. And so, there's going to be an HOA. I just pulled this I think off of Realtor, $165 a month, which, it's a brand new condo. So having a sort of small HOA fee like that makes sense. But in the future, that's going to go up. But, it's brand new. Property taxes, again, I just pulled this, I think, off Realtor. This was the total amount divided by 12. Insurance, it is a condo, so usually you're going to have pretty low insurance. This might even still be high. I'm not sure. I didn't get a quote or anything. I'm just doing some real rough math here. I did repairs and maintenance at 5% of the rent. I usually hate doing that, right? Doing it at some percent. But it is, you can see it doesn't end up being a ton of money a year. 750 bucks, right? Like, okay, the first time you do a unit turn, you're spending more money than that. You can't, if you have to do touch up paint and fix, a couple small things, you're over that. So I feel like I'm giving them a lot of leeway here. Total expenses end up being, 7,479 bucks. NOI, which is about 50%, right? And you've heard me talk about this 50% number before. It's one of the things your operating expense ratios with Small multifamily is often close to 50%. So single family homes, um, it being in that range, I think makes a lot of sense. But so based on the purchase price in my pretty simple calculations, this looks like a 3.34 cap to me, right? And obviously maybe my vacancy collection loss is a little high, maybe my repairs and maintenance is a little high because it's a brand new property. Um, and so I went back and tried to do it like, okay, let's get rid of that altogether. Let's get rid of the repairs and maintenance number altogether. I still left my insurance number, which is the only thing that I think that there's some leeway in, and it got us to uh, just over a four cap, right? And again, I mean, like that is their stated minimum. But if I were starting a company like this, I'd want my first deal to look pretty good, right? Like to be like I just can't imagine that this is the best deal they can find, and that they find one that is just a tiny bit over their minimum is crazy. But so one of the things I wanted to talk about though is like, okay, that's your cap rate, but that's, okay, and you're buying it all cash. So typically, if you buy a property all cash, your cap rate is your cash on cash return, except for, the other expenses that go into your purchase. So like, you add in your all of your, your reserves that you're putting in, your repairs and maintenance, all that. So okay, I called it the total market cap because that's, the total amount that they're raising. But so if I look at the NOI that I calculated and I look at, okay, the total amount they're raising, right? And then, oh, in addition to everything else, they're charging an asset management fee of 1% of assets under management each year, um, which I calculated based on the purchase price. And I didn't spend, I didn't read through every single page of this, but I couldn't, I was trying to find where they actually defined what their assets under management are. I bet they include cash in that, right? I bet they're looking at their whole balance sheet. So I think I'm probably shooting low with this number, but maybe not. But so you take that out, right? And then so you take that out. So this is our net cash flow. And then you compare that to the total amount of the investment. That's a 1.5% yield. It seems like the most that they could possibly be paying out. And if it's set up as a REIT, they've got to pay out 90% of that. But that's the way I'm looking at it, right? Okay, let's say my numbers are wrong and we just take their numbers, where, I don't think here, I mean, I'm still using my insurance, so it's not necessarily fair to call it exactly their numbers. But it is. I have to put something in there, and I couldn't find what they were using. So I think it's pretty fair, and it does get, you're starting with over the cap, right? But so okay, we start with that 4.08 cap, but again, we take out the asset management fee. We look at the total investment, and all of a sudden, again, we're at a 2.14% yield. Um, and so you remember these numbers have no vacancy collection loss built in. They have $0 in repairs and maintenance. And in that scenario, it seems like at most you're going to get around a 2% yield. Um, I can't really wrap my head around how that works. I mean, and this has been my problem with a lot of these platforms. And it seems like that it's accurate. Sometimes it's 2%, sometimes it's 3 or 4. But it seems like it's pretty accurate when you look at the performance of the ones that have existed for a while, is that they end up paying out close to that. But I mean, when we were just on this page, this would not have been too tough to guess that this was going to be a disappointing yield, because like one of the things that we can do, right? I don't really love the 1% rule, one calling it a rule and using 1%, because I think you can be below that to, and still have a deal that works. But when you have, if you were looking at this as a 1% rule, you'd need your monthly rent to be $2,250 for this to be a deal. Now, a lot of times, 0.75, zero point 0.8 will still work depending on your market and, what your property tax rates are and whatnot. But I mean, that would be what? What would that be? Let's look. It's times 0.0075, say, at least 1687, right? And I mean, like, this is like, I've never really made deals excuse me, that I thought worked anywhere below this. This is like I think a stretch unless like you're getting some other builder incentives or something, which sometimes, a deal would do. But so we're even if it's 1350, not 14, I mean not 1250, you're still just way off here, right? So it's really hard for me to understand why we keep seeing the same bit, people copying the same business model, but then not being able to find deals that make sense. Like this is not a deal like this property. No, I'm not talking about the security that you're buying. I'm talking about the property itself isn't a property that I'd ever be interested in purchasing as an investment. Um, it just it's like it's such an underperformer from what I think or what I know exists out there in the world as far as the types of deals that you can find, especially. And I mean, maybe this is a tight market, and so it is growing really fast. Maybe they're just thinking, hey, we're going to get a ton of appreciation on this. They don't really give us any sort of narrative about like what their thought process is, right? They just tell you what the property itself is. I mean, in the offering circular doesn't really shed a whole lot of light on it. They don't even give you like, hey, what we think the returns might be. And so all I can really do is look at what I think the yields might be, right? And from that perspective, it just seems really tough to want to buy that. And so, I don't think, and like I said, I mean, I've been really dismissive of this business model overall because it seems like one single family residential property just has too difficult of a time overcoming this offering expense, right? But one of the things that I've realized is like, okay, it adds a couple of percent, almost 2.5% when you look at from the purchase price. Um, but like I said, I really like mogul deals, and they have a 5% total upfront fee, and this is like okay, five plus, um, like this is six, so this is like almost 8.5. So I mean, it's not so far off that I think if they could get the right deals, maybe it would make sense. But then every single one of these that I've seen they've just continued to put out these deals that I can't even understand. Um, why they think this is it's just hard. It's hard to understand what they're doing here. And I mean, so they had in their latest section back in October, it looks like they raised 1.5 million bucks in pre-seed funding. Yeah, October 10th. Like so they're putting a lot of money into this. I can't, it's so hard for me to wrap my head around setting this all up and then this deal being the first deal that you bought, right? Like that, like how is this the property that we find? How do we not find a property um, in a market that is going to be attractive to and maybe this market because of the really fast rate of growth, you could argue it is an attractive market, and I'm just a market snob as far as sizes of markets. So let's wipe that out, right? But so okay, but but a property that can't reasonably yield more than somewhere around 4%, and then after the asset management fee, we're talking about somewhere around two or less. I just can't imagine that you go through all this work and then you don't have somebody on your team that can find better deals than this. I mean, this is what is just so hard for me to grasp. I don't know. I think that and it's not like they're trying to put out a ton of volume right now because let's go back to their invest tab. They do have or four more deals coming, and I didn't dig into those yet at all because they are just coming soon and they had even less information. Um, but I don't know. I don't know what I'm missing about this, right? But it's obviously there's a bunch of people trying to do it. We've seen like Real Bricks, I feel like, is following this model. Um, There's one other one that is a similar name that I think is following this model. But there's been a couple that have come and gone already that are all basically, it all looks like arrived homes to me as far as the setup, right? And none of them are saying like, none of them really acknowledge that Arrived Homes exists and that they're basically just doing the same thing. Like if it were me, I'd want to be like, hey, this is what makes us different, right? And from my perspective, what should make you different is that you have a business model of we can find better deals and this is why, right? Like have either you've picked certain markets that you're, and all of them say this, oh, well, we're doing a lot of analysis and we're picking markets with better appreciation. Um, but I think that that's just, it's, that to me seems like fluff to a certain extent, especially when I look at where some of them are. But I don't know. I mean, I'm curious if you dug into this one, if you think I'm missing something, right? If I'm being unfair to their math in some way. I am. I guess, one of the things we could do is what happens if we change. I'm not sure if I have this set up to where everything would flow through. But if you change that to 1350? Yeah, okay. So then, even with my numbers, and it's a 4.5 cap. I mean, it's still so far from being exciting to me. Um, but then, yeah, again, still, even after, well, this is not flowing through right, is it? Um, nope. Something's wrong. Oh, I changed the wrong one. I didn't change this one. So let's see, change mine. Oh, okay. So my numbers, it's still just not even a 4 cap, but with theirs, it gets to a 4.5. Like I said, I mean, still like really hard to get excited about a 4.5 cap. But then yeah, after the asset management fee, like we're talking about less than a 2% yield or maybe a 2.5% yield. And so again, I mean, that 1350 is just I think the rent estimate gave me that. Yeah, it is not what they're claiming they're going to get. They're saying 1250. Maybe that's a good sign that they're trying to underpromise and overdeliver, or maybe this was put together last year and rents have gone up $100. Um, without understanding why they picked this market, why they picked this property, uh, it's just I don't know. I feel I just have constantly feeling like I'm missing something because we're routinely now seeing every time there's a new platform that is in this sort of model. I'm just having to say, like, it just seems like the yield is so low. Why would I do this? Like, is it just that I want to get real estate appreciation exposure, right? Like, I'm just trying to be in markets where there's going to be appreciation, and I don't care that I'm not getting any, a significant amount of cash flow, or is it that the people who are buying this, is it so important to them that the SEC is regulating their ownership interest, that it's worth it to get, uh, a return that's, several percent lower on a yield basis? Am I being duped by the sites that I'm investing on, right? Are they actually not going to be able to continue to pay out the returns? I mean, it doesn't look like it to me, right? And that's, I mean, that's the thing. Like, I've talked about this lots of times. My day job is helping investors in San Antonio find investment properties. Um, I would never send this to somebody. This is not a deal that I'd be like, oh yeah, 225 and it rents for 1250. You should buy this. Like I would, especially because this is even worse because it is a condo, and so you have the additional large monthly HOA fee, right? I don't know. It's really tough for me to wrap my head around. If you are excited about this site and you think you're going to invest on here, please put it in the comments and explain to me what I'm missing. Because I am always interested in knowing, what the other side of this is, right? I mean, because obviously they've funded more than half of this already. So there are people that are interested in this model. Um, and I just truly don't understand why. I guess it's just that simple. I guess it's better than putting your money in the bank and maybe you just don't know about some other alternatives. Um, I don't know if that's it though. If you could let me know. Like I said, maybe I'm mistaken. Maybe there's some place in my numbers that things are not making sense. Because they just, the little announcement that they raised 1.5 million bucks sort of baffles me, right? Like that these companies continue to be able to raise money to put together what just looks to me like a copycat business model without I have no understanding of what their competitive advantage is in this space. I mean, most of them just sort of write their website as if, hey, this is something new. You can't do this anywhere else. And like, is the goal like we're just going to be first to market? We're going to be, which they're not, but like maybe we're going to like get out there in front of people before they've heard of Arrived or, I mean, in my mind, you have to look at the competitive landscape and say, hey, this is what we're doing better than them or different, at least different, right? Like maybe okay, maybe we're some different markets. Um, I really just don't know. I don't know. Maybe it's people just see that they're making money, so let's just do the same thing. And it's not a model that you could really stop other people from doing because it's just real estate investing, right? So I don't know. Anyway, that's it. That's all I've got for today. Tickle the like button if you haven't already. Until next time, gonna just keep making mistakes so that you don't have to.